you can't win. You can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed. But then again, we don't want to lose. So you start thinking, what if we could find a way out of the game? Well, then we could break even. Then you could win. Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created.
Bitcoin is a paradigm-shifting technology, and the solution to get us out of our economic dilemmas. That's the latest update from MicroStrategy founder, Michael Saylor. In a recent speech, he broke down the limitations of the traditional financial system, financial and physical assets, and goes on to contrast them to the revolutionary potential of Bitcoin as a 100,000-year asset. Make sure to watch this next clip where Saylor explains why Bitcoin is the key to preserving wealth over time in an increasingly digital world. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Michael Saylor.
And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics, catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's the physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, If you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years unless the government reassesses the value of your property. Then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts through the Lancasters and the Yorks and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years. Probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make a go of it.